What up, traders? What up, investors? Ken here from the Dyslexic Investor, and I wanted to share this article I just read. It's a very quick read. I'll put the link in the description down below. So this is a fund that I follow and I actually have high regards for. This is Elliott Management. They are a huge hedge fund, like 40 billion plus in assets, I believe, and they're saying a lot of their portfolio managers, and they sent a letter out to a lot of their clients saying that a potential loss of 50% in value from the February levels. So we're going to be looking at SPY in a second. They're saying that the overall benchmark of S&P 500 from the February 19th high down to the March 23 low, which I believe was on February 29, was 340-ish, and then it went down literally 120 points to like 220-ish, 219, I believe, on March 23rd. So basically a pretty substantial decline of like 35+%. So they're saying potentially, again, no one has a crystal ball, no one has the projections. They can have all the projections they want. They just no one has that crystal ball to tell you where the market's going to be going. They're just doing their due diligence on just letting clients know that, hey, some of the economic data that we're looking at, not just in the U.S. but worldwide, are showing some very strung out systems and potentially not going to fully bounce back to its all-time highs in the next coming months or year. And again, I can appreciate that. I see that they're being completely transparent. They are saying a lot of their fund managers, even despite buying some purchases, some stocks, bonds, and other favorable equities that they're buying, it doesn't appear that this is a bargains that we're buying at some of these levels. They're not saying, this is where the article is very vague, saying is the whole market going to go down 50%, or is just some industries and some ETFs and segments in the market are going to go drop down 50%. Not 100% clear, but I do like some of the notes that they made, saying that they're seeing that the potential share buybacks could cause some companies to lose that value. So they're indicating that companies that used to buy their shares back heavily might not see that completely bounce back to the all-time highs that they had due to less capital, less revenue coming in, and potentially having to cut the dividend, things like that. And they're looking at a lot of strategies between the M&A, which means mergers and acquisitions. So that is the big fish buying the small fish for discounted prices due to the fact of them being stressed during the times of COVID-19. Even though with the Fed printing money hand over fist and giving out a lot of loans, interest-free rates, and so forth. They also mentioned that Elliott is a investor in 3 companies here. We're going to look at eBay, Peabody Energy, and then of course the Twitter. But let's go ahead and first pop up. We're going to pull up the S&P 500 here. We're going to switch here to the daily chart. So again, hitting the all-time high of basically 340 and down to 218 here. They're saying a potential, so if they're saying, again, the overall market decline another 50%, so we'll just do some quick math, just run into 340, so basically like 170, 169, let's call it 169. Create that at or below. So this is a potential overall. Again, I don't think they mean that the overall market's going to drop 50%, because that's what I don't understand. I think they're just saying some industries that could see a prolonged recession-ish, maybe even further losses than you currently see in a bounce. Because we're seeing a bounce here. This kind of looks like a V-shape kind of thing. It's not a completely like 40 degree angle up. We can look at that degree actually, which is basically, yeah, it's like a, yeah, it does look like a 40, a little bit, maybe a 37 degree angle going up there. But this down is basically very steep. The very famous saying of the staircase up and then the elevator down, meaning just very heavy selling going forth. That being said, We did a live stream this past weekend, and we for this particular week, we notched out that the potential high is here and the potential low for the week is, because that is what the options are saying. And the quick way to do that is literally just go to the trade tab here, go to the options that are expiring this week, which would be the 24th, and then you go to the very top here. Actually, you don't have to even open it up. You just see the plus or minus $10. So plus or minus $10 from the previous day. So things again change day to day and so forth, but that's kind of a number to kind of look in tune to look at the potential movement in the charts. We could be seeing a slightly more of a downturn due to the fact of a lot of companies are going to be reporting. This is the kickoff to earnings season, and we'll just see what happens. And we'll just go ahead and cut to those 3 stocks that Elliott is a current investor in, and we'll look at the technical analysis there. Alright, now we're going to be looking at the overall 3 of the companies that Elliott is an investor in. We're going to be looking at eBay, Twitter, and Peabody. So let's go ahead and pull up the charts and we'll look at those in that order. So we're going to look at eBay. Alright, so it looks like I kind of did some looking at this already. So it looks like it had a potential lot of resistance up at the the 39 level or the 38.90 level, potentially failing multiple times. So looking at this, this is pushing substantially higher because momentum is basically through the roof, super high. The RSI is kicking higher, Chaikin money flow is kicking higher. So this could have the potential or the push power to break above that 39 level. We do have earnings coming around the corner, so this is a potential, could be a nice little easy risk to reward here to the $39 level. Again, this is my opinion, I'm not a financial advisor. This is what I would do. I would put my money on potentially maybe a push to the $39 level for eBay or in the short term. Long term, I don't have anything regarding. We can look at the weekly chart. It's kind of been all over the place. I do like that the moving averages here, the 5 and the 8 are starting to come above the 21, which is another good sign. So it kind of goes back to my thesis of potentially breaking that $39 level. So once it does that, we could be looking at the $40, $41 price targets there. Next is Peabody Energy. That's BTU. Ugh. What does that look like? That looks like a slide. Just a nice slide down. It looks like it's kind of basing here, which is building a base, kind of just trading sideways. This kind of does, you normally trade stocks that are under like $10 or $15. I would do it maybe for a quick trade, but like this is just doesn't seem like worth my while. If I do want to look for a quick trade, we can look at a potential kick higher here, because it looks like this is even difficult. We can go on a weekly chart. It looks even terrible. Wow. For a potential kick higher here, so we're looking for maybe a kick to, again, that's $3.35 stock. It could kick higher to the $4 limit, which is a pretty huge increase percentage wise if you put some shares behind it. But I wouldn't want to kind of throw money around on this one. I don't see anything potentially for me to invest or even trade there. Don't really want to touch that with the overall going down. Alright, so next one is Twitter TWTR, and this thing has been bouncing around as well, again to the high and those lows here in the market. Looking on the daily chart, still below its 200. We kind of have the moving averages. We did cross into the 21, but now they've been trading sideways. On the daily chart, this could be a sign for a potential kick higher. We do have earnings coming out at the end of the month, so basically 10 days from today. This is going to be a risk to reward, basically risking anything below 25.65. I would like to get out, and for a potential kick higher to $29 plus. So risking maybe 50 cents, 80 cents to a potential making $1.50, $2. In the short term, we can look at some Fibonacci retracements here. It's not going to look very pretty due to the fact that it's been beaten up so much. So we're looking at the 23.6, so $26.23 could be potential support. Looking for 29 $38.98. That's the 38.2 retracement. Again, this thing has been performing less than even the overall market, which is the benchmark of SPY. So those are just my little gun hose looking at the technical side of what Elliott, some of the investments that they own. But that being said, if you guys have any comments, questions, please leave in the description below. Greatly appreciate it. Don't forget to like and subscribe. Again, this is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.